statement of a business had a credit balance of 2,690. If the bank statement is having a credit balance of 2,960, that means you are having this amount in your bank account. It means the cash book, your debit side of your cash book will be having the same amount in the bank column. So the bank column of your cash book will be having the same amount of 2,690. That's what it means. So now we said, at that date, check 2,850 had not yet been presented for payment. That means we have unpresented check. So for us to have unpresented check of this amount, 8,850, then we said, what was the bank balance in the cash book on the 1st of October 2021? Now, we're not going to talk about the bank statement anymore. No more bank statement. We need to talk about the cash book, the bank column. So, in as much as there's a check that has not yet been presented to the bank, it means you have written the check, the supplier has written the check, but you have not gotten the alert, or you have not been credited by your bank. So what you do is, your bank column now will have 2,690, which is your credit balance, which is 2,690. Then you less unpresented check, because it has been presented already. So you less unpresented check, which is amount 850. So the final answer will be 2,690 minus 850, 1,840. So that means you'll be having 1,840. Is it going to be a debit or credit? It's going to be a debit because it's your cash book, so it's going to be P. Is it clear? Oh, sorry. Question 13 now, please. Thank you. They said the trader purchased a new business premises. That is capital expenditure. Capital expenditure. What are examples of capital expenditure? Cost of heating and lighting for the new premises. That's the revenue expenditure. Revenue expenditure. Cost of purchasing the new premises. This is capital expenditure because that's spending on new assets. Or non-current assets, that's capital expenditure. Legal cost of purchasing the new premises is part of capital expenditure. Capital expenditure. Office furniture purchased for use in the new premises. It adds value to the non-current assets. So it's also capital expenditure. So we have our capital expenditure to be 2, 3, and 4. So the answer is C. Then the last question that we talked about, question 14, okay? Thank you. It said 2 companies each purchased a motor vehicle of 10,000 at the beginning of year 1. Company G used the straight line method, company G, and company H. G used the straight line method of depreciation at the rate of 15%. So 15% as the rate of depreciation. 15%, and for this 20%. So this is balance method for this. So 10,000. So we have 10,000 multiplied by 15 over 100. Here we have 10,000 multiplied by 20 over 100. So for year 1, 0,000, that's 1,500. That's depreciation charged. So that means for year 1 it's going to be 10,000 minus 1,500. 8,500 years. That's year 1. And depreciation charge for this. For H, we have 0,000. That's 2,000. So we have 10,000 minus 2,000. So that's 8,000. So the difference between year one and for year one between both of them is that there's 500 for year one. Then we go to year two, which will be for year two, for G, year two. Because for straight line method, it's going to be the same value, which is 1,005. So we have 8,500 minus 1,005.
That's
7,000. And for straight using balancing method to be 8,000 multiplied by 20 over 100, 0, 0, 0, 0. So that's 1,600, right? 1,600. So we have 8,000 minus 1,600. That's 6,400. So this is 6,400. So we have the difference of 600. Yeah, we have 7,000 for year, 6,400. So year two is 6,000. That's 7,000 minus 7,400. 7,000 minus 6,400. That's 600. So the difference for year two is 600. So that means H is having 600 minus 500. H is having $100 greater than G. Let's see. 100 greater than G. 100 greater than G, yeah, so it's B. 100 greater for H is same as 100 greater than G. So the answer is B. Thank you. Yeah, I'm done.